Brent crude prices, the benchmark Brent crude is now trading at $90 a barrel. How has this happened? It's happened after Saudi Arabia and Russia have extended those production cuts of 1.3 million barrels of oil per day until the end of the year, which means they'll stay in place until December, these production cuts. This is definitely going to have an impact on India and oil marketing companies as far as our inflation picture is concerned. Also, the RBI will have to take measures. Let's understand this. My colleague from our research bay, Shomit, is joining us to put that in perspective for us. Shomit, these kind of pressures would build because these crude oil prices are rallying now and they're trending higher on the back of those production cuts by Saudi Arabia and Russia. What do we have in store in light of this?
Well, Brent crude is at a 10-month high of around $90 per barrel, and the most impacted sector because of this would be the oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL. This is because of the fact that though crude oil prices are rising, the retail fuel prices, that is petrol and diesel, they have not been on an uptrend. They have been largely flat, and because of this, the gross marketing margin that an oil marketing company earns on selling every liter of petrol and diesel, that has come off. For petrol, it has come down to around 5.5 rupees per litre from 13.7 rupees per litre seen in the month of June, and on diesel, in fact, it has turned negative 5.7 rupees per litre as against a positive 9.1 rupees per litre that we had seen in the month of June. Now, for oil explorers like ONGC, Oil India, Vedanta and HOEC, this should be a positive news, but given the fact that the government has put in a windfall tax that caps the gains on rising crude oil prices, and hence this rise in crude oil prices would largely be neutral for these companies. On the negative side, paint, aviation, lubricant manufacturers, tire companies, cement companies would see a negative impact of this because nearly 40 to 50% of their raw material cost is either directly or indirectly related to crude oil prices. And lastly, there are a bunch of chemical companies like Balaji Amines, Alkyl Amines, Camlin Fine, Clean Science, Rosari Biotech, Nosil. These companies would get impacted because a good part of their raw material cost is linked with crude oil prices. So keep an eye out for all these stocks in trade.